Happy Friday, my good old friends of YouTube. It's your boy Stas here. Welcome back to yet again another video. So check it out. And cheers, by the way, guys. I appreciate you all for tuning in. And by the way, we're almost at 50,000 subscribers, which is nuts. So in this video, we're going to break down the indexes, the charts, stocks I'm looking at, and most importantly, two companies that just reported earnings this week. We have to cover what's going on with them, guys. But first, hit that like button. Don't forget to subscribe and get your free stocks from Moomoo. Open up your account using that link down below and deposit at least $100. You'll get 5 free stocks. Deposit at least $1,000. You'll get 10 more free stocks. And overall, your uninvested cash for now will earn up to 8.1% APY. So guys, what are you waiting for? Use that link down below or go to StasSurFest.com/Moomoo. And with that being said, cheers, let's get into it. So it's about 10:30 a.m. right now on the East Coast, and well, we got some green and we have some red. It's one of those days, guys, right? The S&P 500 is up around 0.1%. The Dow is pretty much at break even. I think earlier in the day it was red. The Russell is red, down 0.5%, as QQQ, the NASDAQ 100, is moving up 0.8%. Pretty good day so far for QQQ. Tech stocks, big tech, doing pretty well today. So guys, it's only 10:30. We're only an hour into the session, but man, we have been selling off right out of the gate today, right? Well, I guess we did see a bit of a pop initially on SPY. We opened up at about 606, rallied to about 607. All right, about $1 there. But then from that point, it's been straight downhill. Now we're at 605, so we are down about what, 0.3% from the intraday high. All right, not the end of the world. But we are selling off a bit, maybe going down to test the low from yesterday after the bell where we hit 603.90, 604. You know, that's where potentially we could be going here on SPY. And on the 5-day, 5-minute, nothing much worth mentioning there. And here on the 20-day chart, maybe on the 30-minute, you guys can see it even better. But we're still in this little downtrending channel, whatever you want to call it, here on the 30-minute chart on SPY. And on QQQ, if I pull this up, well, it's the opposite. We're hitting all-time highs. We're not in a downtrending channel like SPY. In fact, we're in an uptrending channel. You guys see that right here on QQQ. So tech is looking good, guys. And you know the NASDAQ 100 here, QQQ, it was lagging a little bit. A little bit. I mean, obviously it's doing very well. But as the S&P was hitting all-time highs, the Dow, right, QQQ only hit an all-time high about 3 weeks ago, and the time before that was back in July. You guys remember that. So it took a little bit for QQQ to get back to all-time highs, whereas SPY and the Dow, they've been hitting all-time highs, but now QQQ keeps on ripping as SPY and the Dow, they're kind of tapering off a little bit. But overall, guys, we're still very bullish in the grand scheme of things, but in the short term, we are selling off a little bit. But it's not a big deal on certain indexes here. It is really, seriously not a big deal at all, as the bulls are obviously still in charge in the grand scheme of things, guys. So let's break down some earnings. We got Broadcom yesterday. AVGO is the ticker. And by the way, guys, make sure to join my free email list. It's linked down below in the description box. Put your first name and your email address, and I'm sending you my top 3 stocks every Monday for free, 100% free, no strings attached, guys. No credit card number, none of that. Check it out. Link down below. AVGO, 22% in the green. Fresh high on the 4-hour chart. And I believe all-time high on Broadcom. Unfreaking believable, guys. And the crazy thing is, I think they missed on revenue. I was looking at this last night, but their guidance was pretty good. Let me double check. Adjusted EPS came in at $1.42. That beat the $1.38. All right, that's good. But sales missed, 14.05 versus $14.09 billion. So mixed bag sales for earnings rather for Broadcom, but they guided for Q1 revenue of about $14.6 billion, which is above the $14.55 billion expected. So stocks, you guys got to realize they're forward-looking vehicles, so they can look past a company missing ever so slightly on revenue in a previous quarter. They can look past that. Stocks can, investors, traders, whatever. But they can't often look past bad guidance. You know, if they reported awful guidance, Broadcom, I guarantee the stock would not be up 21% right now. But here we are, breaking out. The triangle is looking fantastic. Well, it played out like we called out, on Sunday's video. And yeah, we're now at 220. I wouldn't necessarily buy Broadcom here. I'd probably, if I'm in it as a trade, I would lock in profits 100% right now, no doubt. And I'd wait for a pullback on this thing. You know, it's crushing it. If you were already in it, congratulations. AVGO Broadcom is on fire. And Adobe, talk about a fake out, man. Oh my goodness. And this is why it is very risky to trade earnings, man. You know, Adobe on the charts looked really good heading into earnings. We had that inverse head and shoulders. We were breaking out of some critical resistance levels. And, well, earnings came out, and we literally reversed all those gains. You know, you've heard that saying in the stock market, stocks take stairs up, elevator down. Well, this is exactly that. Exactly that. Adobe, it took it, a month and a half to get from 475 to about 560, a month and a half, and that's a big move, by the way. And now in a day or two, it went from 560 to 460. So we lost all that gain and some, guys. Now we're down 17, 18% from just 2 days ago. So Adobe is not looking the best on the charts right now, no doubt. But maybe it could be opening up as an opportunity for an investment here. I have to look deeper into the actual numbers, of course. We can't just buy a stock as a long-term investment based on just charts. I know a lot of you guys know that already. But, yeah, I'm not seeing the numbers here on the live news tab. Let me actually see if I can pull them up quickly on Safari, guys. But yeah, Adobe, this is why it is very risky to trade around earnings, because truthfully, guys, a stock could be setting up nicely, the chart could look beautiful, but you really don't know what the guidance is going to look like, what the numbers are going to look like. So it looks like here, yeah, I mean, boom, proof's in the pudding. You guys can't see it. Let me actually see. Maybe I can transition over here to show you guys. Yeah, it says here, you guys see it. Their guidance was pretty was off, right? They're expecting fiscal first quarter sales to be between $5.63 billion. You guys see that right here, and $5.68 billion versus the $5.73 billion expected by analysts. So it's not like it's crazy. It's under the estimate by a lot. It's not necessarily, but even that little miss could cause a sell-off in the stock. You know, again, stocks are forward-looking vehicles. If guidance is a little off, that could be it. That could be it. An analyst at TD Cowen downgraded the stock to hold from buy, while Wells Fargo kept its buy rating following what it called a frustrating 2024 for the company. The stock is now down 20% for the year, badly trailing the NASDAQ, which is up 33% and crossed the 20,000 mark for the first time on Wednesday. Which, oh my God, that's crazy. I didn't realize that. NASDAQ crossed 20K on Wednesday. I missed that. Man, we're hitting milestones this year, guys. Dow 45,000, S&P 6,000, I guess now NASDAQ 20,000, which is ridiculous, guys. Yeah, NASDAQ is at 21,000 now. Wait a second. Oh my goodness. Actually, no, it's not. Okay, I'm wrong. NASDAQ Composites at 19,950 right now. We're getting there. We hit 2,060 or 20,000, 61 earlier today. But yeah, Adobe, man, struggling, no doubt. But I'll dive deeper into it. It could open up here. It could be opening up as a long-term opportunity. So let me do one more quick here, guys. By the way, if you're still here, I appreciate you, man. I really do. I appreciate you guys for tuning in. Hit that like button. Don't forget to subscribe. ARM Holdings, ARM. I'm gonna put it on your radar again. This is one that I sent out in my email on Monday, which again, it's free in the description box, and it keeps breaking out. 4% more in the green right now. We're at $154 a share, breaking out of this wedge, looking beautiful. We're heading now. I guess we did run all the way to about 154, which was the high from early November. That was a target we covered. If that breaks, 158, 157, 163 could be coming next. So ARM Holdings, guys, ARM, keep your eyes on this momentum that's clearly building right now. So what do you guys think? Let me know your thoughts in the comment section. And before you click off this video, hit the like button. Don't forget to subscribe and snag up your free stocks from Moomoo. Open up your account using that link down below. Deposit at least $100. That's it. You get 5 free stocks. Deposit at least $1,000. You get 10 more free stocks. That's 15 free stocks. And overall, guys, your uninvested cash for now will earn up to 8.1% APY, which, guys, it's a no-brainer. So use that link down below or go to stocksurfs.com/Moomoo. And with that being said, cheers. I will catch you guys in the next video.